All right. Hello and a big cheers to each and every one of you. Welcome to Happy Hour with the Lincoln. This is where I'll do my best to answer all of your stock market related questions. So if you have questions that you think would benefit the stock trading community, questions that you need answers to, just take a moment and send them over to support@thelincolnlist.com. I'll do my best to get them on some of these upcoming episodes. Also, if you guys out there that's trading, you might be seeing some stuff for the first time, this wild volatility, this crazy action, 1,500 Dow points taken out in 2 days in the middle of afternoon after an epic run the previous week, and your portfolio's going back and forth and you have absolutely no idea how to trade this. This is the first time that you're seeing it. It's confusing you and you want the help that you need to do what you need to do. Visit thelincolnlist.com, click on the trade room tab, and you can start trading with us right away. I'll do my best to share my experience with you and show you my trades live on screen and walk you through this type of market. So here is the question of the week, because this is what was in my inbox over the last few days. Doug, are we currently in a bear market? Doug, is this an actual market correction? Doug, how long do you think this selling will go on for? A month? 3 months? A year? Doug, should I sell all of my securities now and go into cash so I can avoid the upcoming recession? Whoa, guys. Take it easy. Take it easy. I know this can be scary. I know that you're afraid. But trust me, by the time I get done with this happy hour, you will feel better. Your troubles will be at ease, and you will learn. You will learn not to fear what it is that you're seeing right now, but rather embrace it with open arms, because this could be one of the very best trading opportunities you may ever have in your life. Let me explain. So let's first, before I do that, let's say, are we in a correction? Yes. We've actually been in a correction since October. So there's no question. We've already broken certain moving averages, certain percentage levels, Yes, we are in a correction, and we have been in a correction. Now, the market will always bounce through these corrective times, and some of the biggest bull market rallies that you'll ever see will come in bear markets. So I also believe that, yes, we've been under the 200 moving average on most of the indices for a while. So we are technically in not just a correction, but we are also in a bear market. And again, that's not such a bad thing. Now, the next part of that many were asking is, are we in a recession? And the answer is no, they're completely different. However, what we are experiencing right now kind of points to we may see something like that down the road in a few months, maybe 6 months, maybe 3 months. I don't know. It's not up to me to decide that. So before I go into kind of talking about some of the things I've experienced over my career, I have to tell you just straight up, which you already know, what happened in the past doesn't mean that's something that's going to happen in the future. But what we do as traders, I don't like to be in the prediction business. I like to be in the prepared business, but I do like to put theories and things together. And if they work out, or I see certain signals that give me the confidence that it's going to work out, that's how I actually make trades. We kind of do that if we're trading technical analysis. When I don't want to say we're predicting, but we see a certain pattern, we see a certain series of things develop, and then we take a trade based on that, and that's ultimately how we make money, because when we see that, the result is we see something else. That's how we profit. So I want to go back and I want to talk about 2 major corrections I've experienced in my trading career. That would be the .com and that would be the credit crisis. Now, when we go back to both of these, they share a very similar situation to what it is that we experience now. And that was, there was this initial mass sell after a long bull run. So in the .com era, there were a lot of people talking about these companies not being any good, not being able to sustain their PEs and all that good stuff. But it took a while before it really worked its way into the market. And I'd say it was around February, March of 01, we really got our first big, huge down day. I think it was 1,500 and some points or something like that. A ridiculous amount at the time. My memory could be fading, but I do remember a big old pullback there. And that initial pullback was picked back up, and the market's kind of stabilized, started to kind of grind its way back up a little bit. And then later on in the year, you started to see a second wave of that selling that was much deeper, much stronger, and lasted a lot longer. Now we go to 2007, we had the same thing. Real estate was the thing. Known as real estate bubble, financial crisis, etc. And it sort of started coming out, hey, these housing prices are not sustainable. Then it came out with AIG, Lehman's and all that. And there was this initial hit into the market. And I think it was about June or something like that when we first got hit. And the same thing happened. The market got picked back up off of that first pullback. And then, by the fall, September, October, excuse me. I'm doing this all by memory. So I could be a couple days off here and there. We got our second wave of selling. So here's what I'm saying. There was an initial event that started it. And then it was kind of brushed off to the side as, okay, well, maybe that was a one-off. Maybe that was profit taking. Maybe that was just something we shouldn't pay attention to. And the market tried to pick that back up. Then the second wave came in, and it was that second wave that was really deep and was really strong and really kind of put the hurting on people that were long. So if we look at the market now, I'll try to put up some charts, but if you go back into February, and we were on this linear run for, several, like a decade or something, this bull market's been going on, especially 2017, the market barely pulled back a percentage point. So you're just rolling right on up, and then all of a sudden there at all-time highs, you get this epic collapse in the market in February. And just like the previous ones, it kind of got brushed aside, picked back up, and then we were kind of thinking all-time highs, and then all of a sudden now we've had this second wave of selling that has brought us down here to where we are today and seeing some of these big pullbacks. Now, whether this turns into something that is long and deep and all that kind of good, not a good choice of words, I don't know. But there are signs that's how the other two started. And one of the things I have learned in my trading career is that you can often wake up and look around and say, how did I get here? How did this happen? And then when you start looking around, you say, oh, there were signs. The signs were there. So yes, there are signs here that we are in the midst of a heavy correction, and we may possibly be entering a recession. Now, on that note, it's not that big of a deal because this is just something that's part of the economic cycle. I talked about this a while back in a couple of happy hours. I'm going to put that chart up if I can find it again as well. And it shows you that every 5 to 10 years, the market goes through a corrective phase. So this is just part of the economic process. It doesn't matter what's changed in the world, computers or whatever. Human nature is human nature. And every decade or so, after a long bull run, there will always be market corrections. And if you choose to make stock trading a career, you will have to deal with it. That's all there is to it. It's just part of what happens after such global growth. Global growth will slow down, jobs numbers will get worse, and that's only because jobs can't get really that much better than they are now. Now you may ask why? Because everybody who wants a job has one. Now they may not have the best job in the world, or they may want another one, but they have one. So the 3.5%, 4% or whatever the unemployment is, that's just 3.5% to 4% that don't want to work. And you guys know what I'm talking about. You always got a slacker in your family or in your inner circle that does not want to work. So you can't give everybody a job. Not everybody wants to work. So those numbers naturally will go up. I mean, that's just how the economic cycle. So here's what I'm saying. Number one, don't fear it because it's something that you're going to have to live with. And eventually the country will come out of it like it did every other crisis, bubble, tragic event. Will come out of it too. So if we're talking long term, this is a great buying opportunity. Now, if you're a short-term trader, the question is, what do you do here? Well, there's a couple of things that you need to do first and foremost. And the top of that list for me, by all means, is figure out how you're going to start short selling stocks. This will be one of the best opportunities. You guys know me for a long time. This has been my bread and butter during bull markets, and this kind of stuff is a gold mine. I'm telling you, you just got to have that in your toolkit if you want to survive. You can make so much money shorting stocks in an environment like this. It's just one more bullet you've got in your gun, for whatever lack of a better analogy. I mean, you're just silly not to understand this, not to grasp this. I mean, it's like you've got a winning lotto ticket in your hand and you scratch it off and there's the number, but you're just too lazy. You're just too unmotivated to call the lottery commission and go collect your prize. It's almost that good. Now, the next piece of that is you've got to take what you normally were trading and you got to be very selective about it. Because in a bull market, everybody is chest pounding. Everybody has greed and they just want to be in trades and they buy dips and they chase stocks. And then when they get dinged a few times like they have over the last month or so, fear starts coming into the market. And as I've always said, fear is such a big emotion. It's so much more powerful, fear is, than greed, right? So people will act more ignorant out of fear than they will out of greed. So they'll panic, they'll make rash decisions, they'll sell things, and that often makes for great dip buys as well. So you've got to be a lot more selective. And of course, the last thing you do is taper down your position size a little bit, because what you normally were dealing with as a stop loss, of maybe you were trading a stock that had a 50-cent move to it here and there, you know, when you got into it on your technical analysis, now you might be talking about $1.50. I mean, you got stocks like Netflix that'll go up $10 in the morning, give back that $10, and then go down a little bit later. So to kind of wrap this up, guys, I don't want you to fear what's happening. It is a great opportunity, because at some point, whether you don't do anything at all, you sit on your hands, you'll be able to buy stocks at a much cheaper price. And the bull market will continue at some point. There's still a few things that need to happen for us to really confirm a recession. Just think about what we've seen. You're probably going to see lower prices. Number one, figure out how to start shorting stocks. I don't care what it takes. If you want to survive, you need to do it. Once you do it, you'll realize that not only will you survive, but you will thrive. And it's a great thing to have in your toolkit. Second thing, be much more selective about the opportunities you take. Be much more patient and wait for that proper setup and that proper time. And third, just take down those sizes a little bit more. Loosen your stops just a touch, not a bunch, but just loosen them up a little bit more. Give yourself some flexibility. And you'll see that you'll be able to trade through this volatility. You'll be able to work your way through it, because there will be massive upswings. There'll be massive downswings. But you'll want to be able to capitalize on both of those. And that's what's really important right now. So if you need help with that, you know where I'm at. Click on the Trade Room tab at thelincolnlist.com. I'm done. I'm done for the week. It's been a great week. It's been a lot of fun. I'm enjoying this talk. I'm going to drink the rest of this whiskey. Thanks for watching this happy hour. Until the next one, take care. Cheers. Trade well.